Welcome to CLiK's weekly market newsletter, structured insights from real traders, not signal chasers. I'm Ifti, and here's what shook the markets for the week ending October 10th, 2025. This week, global markets threw a full-blown tariff tantrum. President Trump's 100% tariff announcement on Chinese imports sent investors diving for cover. Equities dropped across the board. The S&P 500 down 2.5%, the Dow down nearly 3%, and small caps took the hardest hit with a 3.3% slide. Meanwhile, gold and silver sparkled up over 2% and 4% as traders sought safety. And as for crypto, let's just say it had a reality check. The ongoing US government shutdown left traders flying blind with inflation, jobs, and retail data all delayed. That's like driving without headlights in a thunderstorm. Without data, the market became hypersensitive to headlines and Fed speeches, so volatility was the name of the game. In the UK, Chancellor Rachel Reeves is trying to carve out fiscal breathing space before November's budget, while the Bank of England warned of a potential sharp correction if markets cool on AI or the Fed. Despite it all, the FTSE held up better than most, down just 1%, cushioned by a weaker pound. Traders, keep an eye on next week's UK GDP numbers. If growth disappoints, we could see the British pound test the 1.32 handle. Gold hit over $4,000 an ounce, its highest since June, and silver surged almost 4.5%, outpacing its older sibling. It's a classic rotation into safety when uncertainty spikes. At CLiK, we always say volatility creates opportunity, but only for the prepared. Crypto had a rough week. Ethereum plunged nearly 12%, Solana dropped 19%, and Bitcoin fell about 5.5%. A stronger dollar and talk of tighter regulation hit risk appetite hard. Lesson here, don't try to catch a falling knife. Let structure and confirmation lead you back in. Looking ahead, here's what traders should have on their radar. Wednesday, 15th October at 1:30 p.m. The US CPI data. Inflation will drive dollar and yield direction. Also on Wednesday at 3 p.m, Fed Chair Powell speaks, and you can expect volatility in USD pairs. Thursday 16th at 7 a.m, UK GDP data will be key for the FTSE and sterling. Thursday 16th, 11 a.m, NISA GDP tracker, early read on UK growth. Friday 17th, 9 a.m, GMT Eurozone industrial output, a pulse check on Europe's recovery. All week, watch for China's response to tariffs. That's the wild card that could move everything. Plan your trading windows around these times. Volatility spikes are great for opportunity if your risk is defined. This week proved why process beats prediction. Markets react to emotion, policy, and timing, not just charts. Or, as we like to say, volatility is the price of opportunity, but only the prepared get paid. At CLiK, we help traders build confidence through structure, rules, and risk management, because volatility isn't the enemy, undisciplined trading is. Or, as we like to say, volatility is the price of opportunity, but only the prepared get paid. Ready to trade with structure and confidence? Join our 5-day Forex and CFD course at Park Square, Scunthorpe, North Lincolnshire, from the 26th to the 30th of October 2025. If you would like to come and meet us and see if trading is for you, we have limited guest spots available for the first 2 days, and these are completely free. No pressure, no hype, just real traders teaching real skills. Click the link or visit cliktradingeducation.com to reserve your spot. Thanks for watching this week's CLiK Market Roundup. Trade smart, stay disciplined, and remember, education comes before execution.